For a deeper dive on those markets, joining us from Austin, Texas is Ted Oakley, managing partner at Oxbow Advisors. Hey, Ted, how's it going?
Doing fine, honey. Thank you.
So a lot of the themes that we've been talking about this year, and I guess for the last year, it has been around the trade war. We do know that we have some deputy level talks going on today and tomorrow in D.C. And we also were talking about the Fed. But now that that is in the rear view mirror, what kind of catalysts are we looking at when we talk about the markets now that we are so close to those record highs still?
Well, I think the Fed won't go away, Heidi. I mean, I think what happened is they put a Band-Aid out, and people bought it yesterday when he talked about, hey, we would do QE if that came around. So people went ahead and bought the market. I think going on, though, you look at the fourth quarter, this is where a lot of things happen in the fourth quarter. And I do not look for anything substantial out of China. I think that goes on longer than we expect. So I don't expect anything other than, good news, bad news, good news, bad news, back and forth all the way. So I think you have to go ahead and manage money as you always would. You have to look at what you own.
Hey, Ted, Brian Chung here. So on that point, I mean, you kind of bring up this idea that we don't really know what the next Fed step is going to be, but that the Pandora's box has really been open. As you mentioned, QE or at least some asset purchase growth might be back on the table. So if anything, maybe the meeting yesterday actually reopened more uncertainty from a monetary policy standpoint. I mean, if you're an investor, do you see that as a risk? Do you see that as maybe a way that, the trade story actually takes a backseat here? Or do you still think that things really haven't changed between Wednesday morning and today?
I don't think they've changed anything. I think the thing you get into here is you have to look at what the Fed looks at. They look at employment and the consumer, not realizing the capital expenditures are going down. And worldwide economies, look at OECD this morning, worldwide economies are breaking. And when you look at that, that will eventually end up on our consumer. But we have a Fed that takes it in stride and basically looks at two things, and they look backwards. So that's the war that's going on right now. We think eventually, yes, they get shocked into bringing rates lower. We thought that since last July of 18 that they would keep on coming down, and we still think the same thing.
So you mentioned the global economic slowdown that's happening right now. So there's that we're seeing that's the backdrop. But at the same time, what do you think about the FedEx CEO's comment saying that we're basically whistling past the graveyard when it comes to U.S. consumers? What do you think that the Fed should do given that backdrop?
Well, everything that's going on with the consumer is fairly late cycle. And I think people forget this one thing, is that if I'm a business and I hire someone, when I lay them off is when my business has already turned bad. I don't lay people off expecting business to go bad. And I think that's what people misunderstand about the employment numbers. It is not a future indicator. What happens if my business is going bad today and I'm really getting scared, I start laying off them, but my business is already bad. And I think that's what will happen with the Fed. They're going to miss it. And FedEx is correct in saying, hey, there's things going on out here that you people are not looking at. And I think they're right on the money.
Thanks so much, Ted. Ted Oakley of Oxbow Advisors.
Thank you, Heidi.